Do you want to know the secret language of the stock market? It's not about charts, numbers, or endless technical jargon. It's all about candlestick patterns. In this video, I'm going to show you the only candlestick patterns you need to master to make smarter trading decisions. Trust me, these patterns are the key to reading the market like a pro. Let's dive in. Hey everyone, welcome back to the channel. If you've ever felt overwhelmed by the countless candlestick patterns out there, you're not alone. With so many, it's easy to get lost. But today, I'm going to teach you the only candlestick patterns you truly need to know whether you're a beginner or an experienced trader. We'll break these patterns down in the simplest way possible. So by the end of this video, you'll be able to spot these game changers in any chart. Let's get started. Before we dive into the patterns themselves, let's quickly talk about what a candlestick is. A candlestick shows you 4 key pieces of information about a stock for a specific time period: the open price, the close price, the high price, the low price. The body of the candle represents the difference between the open and close prices, while the lines or wicks show the high and low points. When you start combining multiple candlesticks, you create patterns that reveal the market's psychology and potential future movements. The Doji is one of the most important candlestick patterns to know. It happens when a stock opens and closes at almost the same price, forming a cross-like shape. It signals indecision in the market, meaning the bulls and bears are in a standoff. A doji alone doesn't tell you much, but when it appears after a strong trend, it could signal a reversal. Next up is the hammer. The hammer has a small body at the top of the candle with a long lower wick. It's a sign of potential reversal after a downtrend. When you see a hammer at the bottom of a trend, it often signals that the bears have exhausted themselves, and the bulls might be ready to take control. Now, let's talk about the engulfing pattern. There are 2 types: bullish and bearish. A bullish engulfing pattern happens when a small red candle is completely overtaken by a large green candle. This shows strong buying pressure. On the other hand, a bearish engulfing pattern happens when a small green candle is followed by a large red one, signaling potential selling pressure and a possible trend reversal. So there you have it. Master these candlestick patterns, and you'll be able to understand market sentiment and make more informed trading decisions. If you found this video helpful, don't forget to hit that like button and subscribe for more trading tips. Leave a comment below if you've ever used any of these patterns in your trades. I'd love to hear your experience.